How's it going, everyone? Nathan here, and welcome back to my YouTube channel, where in this video we're going to be talking about part 2 of how to invest in the stock market as a beginner within Australia specifically. So if you remembered in my previous video in part 1, we actually went through more so the basics of the stock market, what it really is, and the ways to expect how to invest in it. Now, just in case you didn't go through part 1 of this series, I'll drop a link in the description below. Just make sure you go through it because it's much easier to actually watch this through as a series rather than individual videos. So now essentially, if you have gone through part 1, you will have known what the stock market is and general fluctuations over the short term. But that's okay, because if you have gone through it, you now know more than 80% of the general Australian population. Every single person is going to be looking at all the financial news that come through. Markets going up, markets going down. There's so many to choose, so many companies, and which ones do I actually pick? You are straying away from the herd and going through treading your own path, which will actually lead you to a much better situation over your financial journey in the long term. So essentially in this video, we want to be going through which online brokers we want to be using, as well as my own personal preferences. We also want to take a look in terms of micro investing and who that could actually be suited for, as well as the pros and cons of both of them and comparing them against each other. As someone watching this video, I want to make sure that I give you the most value. So if you found by the end of this video you have enjoyed it and you have found value, make sure to smash the like button and let me know in the comments down below, because I really appreciate it. So this wouldn't be a video about stock market investing if I didn't take the time to address micro investing. So the way that micro investing works is it allows people to actually invest smaller sums of money, and a platform that allows them to actually enter the stock market with money that they otherwise would have placed into their savings account or their golden piggy bank. So the way that people really see it is it's spare change investing. Think about the coffee that you may have bought. Normally that coffee would have only costed $4.20, but you only have a $5 note. So the difference between that is 80 cents, which normally you'd pop back into your bank account or your savings account. But with these type of applications, they actually take the difference and invest it on your behalf. Now, when you think of that, people think of the market as a place where you need plenty of money. You need tons of money to kind of enter in and breach that barrier. But with micro investing, you can get started for as little as 80 cents. It's just pretty much the difference between a cup of coffee and a $5 note. So when we're going to talk about the different types of apps that actually offer this form of investment, you're thinking about the different types of ones such as Raise, formerly known as Acorns, Spaceship Voyager, First Step. And now, because it's becoming such a big platform, even the big banks are starting to get into it. So Commonwealth Bank now has CommSec Pocket, which essentially allows you to invest as little as $50, and the fees for that would only be $2, which otherwise it would be much more. So if we talk about Raise, which is actually probably the most commonly known one, Raise essentially works in a way of you install it into your phone, popping in your bank details, and the way it works is it takes a look at all the little purchases you actually make through your day-to-day lifestyle, the coffees, the bagels, the croissants, all of that, and it takes the difference between each purchase and the amount you paid, rounding it up to a 0 figure. What it does then is it rounds up all of that money and invests it within a portfolio that you actually can choose. So instead of actually having to pick individual companies from the 2,000 companies, Raise actually has different portfolios which are actually managed by their team. All you have to do is actually pick one based on your risk tolerance and your threshold, and from that point on, they will just keep putting that money into a diversified portfolio for you. So the reason why I say micro investing really is just dipping your toes into the water is because the fees are so much cheaper when someone's starting out. The fees are only $2.50 a month for an account that actually has less than $10,000. But the moment you start to go above $10,000, that's when it starts to creep into percentage fees. So I think when it comes to this type of option of investment, it's perfect for the beginner who wants to actually learn a little bit more, but doesn't really have enough money to actually make large purchases. So using these types of micro investment apps, it just gives you a beginner feel for what it's like to own a piece or a portion of a company stock, or a portion of a portfolio. From there, you can build and understand a lot more for when you actually start to make larger purchases. So think about the people who may be in uni or working just a few hours a week. That small amount of money works perfectly when it comes to micro investing because the fees are so low, whether otherwise if you were looking at an online broker, you probably get smashed with fees before you can even put anything worth considering. I'll take the time to discuss them further in another video because they have actually become such a big player in the field. But at the same time, I wanted to mention why at this time, I don't actually prefer to use micro investments. So at this point, I'm quite far in my career. I'm 26, I've been out in the field for a good 4 or 5 years, and I actually have the capabilities of making larger purchases. So when I mention the fees of these types of micro investing apps, they are very cheap when you have such a small portfolio. But the moment you start creeping up, let's say for example, a $100,000 portfolio, the fees of that is actually 0.275%, which can actually be $3,000–4,000 when you actually start reaching that 6-figure amount. Another reason I don't prefer micro investments for myself is because I actually like having a lot more control. By doing a lot more research, I can actually plan accordingly where and how I'd like my portfolio allocation to be. For example, I'm a lot more bullish on tech stocks right now, and I want a higher percentage allocation towards that. These type of micro investments only do give a diversified portfolio, but they kind of fix it within that area which you're forced to invest in. Whereas the way I kind of like to do it, I'll do my research and then I'll go into a broker and make my purchases all by myself and manage it all by myself. And lastly, I don't actually think that spare change investing, micro investing, actually fits within my financial journey. For example, I want stock market investing to be quite a significant portion of my passive income. And essentially, I'm only looking forward to the long term, whereas spare change investing won't actually help me build that within the period of time that I'm looking for. It's just not enough money in the game. And essentially, when you're looking at 5 to 10% growth, you want more money in the initial phase to actually build it in the long-term phase. So as a result, the process of building wealth just can't come fast enough if you're only investing $20 or $50 a month. And this takes me to the point where we start talking about an online broker. So the ones that allow you to make larger purchases of individual stocks, mutual funds, bonds, all of those sorts. So a lot more diversified, but at the same time, a lot more control. At the same time, if you do have a lot of money and you're more so looking for a plan, I do actually recommend going to see a financial planner or an advisor because they will be able to help you manage something and plan something that is unique to your own circumstances. But in this case of stock market investing and just planning it all for yourself, I do recommend using an online broker, and we're really going to get into it right now. So essentially, there are a lot of different online brokers, and sometimes it's actually quite hard to choose which one you want. So obviously, when you're going to think about it, you've got your big 4 banks. All of them generally have their own types of brokerages. So CommSec, you've got NabTrade, and you've got Westpac. Those 3 are the banks that put them through, but you've also got really long-standing individual ones such as IG Group and CMC, as well as new players in the game such as Self-Wealth. What I'm going to talk about today is I'm going to compare one of the big banks, CommSec, to one of the ones, and personally the one that I use, which is CMC Markets. So when it comes to using a platform such as CommSec, one of the big reasons that a lot of people kind of push towards them is because of trust. You're managing a lot of money and you're handling a lot of money. So you want a big bank to kind of push that through forward to you. CommSec has essentially been around before the 2000s and it's one of the oldest platforms to date. Most people actually do bank with CommBank already. So the way that it works is it kind of is an all-in-one platform. Your CommSec account, your CommBank account, they kind of merge together as one and give you a vision from just one app, which means less clutter in your phone. Another reason people actually prefer CommSec is because of the research capabilities. You're getting pretty much instant live updates on all the stocks as they go up and they go down. You're also getting a lot of different market news and a lot of the reports that come through as they come through for all individual companies, and for people that actually do their research, it's really favorable to have it all in the one app. So the reasons that I don't think CommSec's so great is because the fees aren't really the cheapest, but at the same time, they're not really that favorable. I'm usually one that makes trade purchases between $1,000 and $10,000, and the fees for CommSec is actually $19.95 per trade. But at the same time, you have to remember, it's not just one-time fee. You're paying it twice. You're paying it to buy in, and you're paying it to take it out. But at the same time, the fees actually keep going up the more and larger your purchases get. So when it comes to this, I don't really want to be paying a lot of fees as I make a lot of purchases. So at the result, the less fees I pay, the more shares I have. Another thing that gets me about CommSec is that if you've ever tried to call a bank, it takes ages to actually get to the right person you need. You have to press 1, press 2, say what you want to do, misspell it, and eventually you'll get there after 10 to 20 minutes. So CommSec actually does not have a live chat platform. So simple questions such as how to make a purchase or some specific information about a company's not showing up, you actually have to email them or call them. So those two types of platforms are quite old when it comes to communication, and at the same time, it's not very beneficial when you're trying to make a trade instantaneously. So now let's compare that to CMC Markets. One of the best things about CMC is that their fees are a lot cheaper, pretty much almost half the price of CommSec. So they're pretty much an $11 flat fee, or $9.90 if you count as an active investor, making a lot more trades. So I find that by making even 5 to 10 purchases, I'm pretty much saving half my money, which that money can actually go into more shares. Another area is that I've usually pretty much done my research ahead of time, so I just want to get trades done. With CMC, the trades actually happen quite fast. They're almost instantaneous as long as my asking price meets someone's selling point. From that point, it pretty much just happens. Whereas CommSec, I have heard a few things about people having to wait 20 to 30 minutes to actually get their stock trades bought. And in that time, the stock price can actually fluctuate. It fluctuates within the minute, hour, and that time can be quite crucial to someone that actively trades a lot. Now, CMC Markets was actually voted as one of the top platforms, and at the same time, there's not many areas where I see it go wrong with it. But if I'm meant to choose one, they do actually have fees when it comes to inactivity. So if you're someone that makes a trade once and just doesn't do anything for the next 2 years, you're actually going to start to get fees that are attached onto your account, and this can kind of suck your account dry. So that's something where it compares unfavorably to something like CommSec, where they don't actually have any inactivity fees for your Australian shares. They do for the international, but that's another thing. Now, the reason that I use CMC Markets purely is because when I was searching for one, I found it on Google as one of the top performers at the time, obviously, and I just chose to go for it. I do a lot of the research off the platforms through Google, YouTube, so and so, and actually compile my own research accordingly. That allows me to make the best decisions to buy and actually maintain my portfolio management accordingly. So the only reason that I'm going on an online platform is because I already know what I want to buy or what I want to sell. I'm not going on there for any additional research, which is why CommSec just isn't the right place for me. Sometimes I do use them for research, but CMC with their instantaneous trades just has a much nicer ring to it, and I don't want my money just holding there for no reason if I already know that I want to purchase that stock at that specific price. I also like low fees, which is why with CMC Markets being almost half the price of CommSec, that's an obvious choice, and I'm really happy that I chose that, luckily, within the beginning and moving forward onwards with that. Another area that I want to mention is there is a new player in the platforms, which would be Self-Wealth. They actually do have even cheaper fees than CMC Markets with a diverse interactive research platform as well. So kind of 2 in 1. So I'm actually going to probably move to them eventually and just check them out, see how they go, but at the same time, most likely keep my current platform in CMC and just play between them both. So that's it for part 2. The main reason I wanted to film this and really be specific in terms of it is because I wanted to actually help you understand that you do have your own opportunities on what you want to do. You do have options. You can start micro investing if you're beginning in your journey or you don't have enough money. There's no one that can actually tell you that you are not allowed to invest in the stock market. You're not allowed to invest yourself. And there's so many platforms these days, especially with the internet boom, that allow you to do things that previously people said you can't. So if you do only want to start with a small amount of money, I do actually recommend micro investing. But the moment your purchases start to get a bit larger and your total portfolio starts to go above $10,000 to $20,000, which it definitely will over time, I would start to move that into an online broker where you can actually not pay those monthly maintenance fees, and all your fees really come down to are the fees for purchase, which with CMC, for example, is $11 for a buy-in. When it comes to actually investing, this is an area where you should be looking extremely long term, and an area where you can build a serious amount of passive income, which one day will actually overtake your active income. So I really want to make sure that you are understanding and you have a lot more in-depth detail into each area of buying a stock and actually preparing yourself to make that first purchase. So in part 3, we're most likely going to make a purchase and actually see how you should approach it, what type of research you should do, and where your options really lie. So that's it for this video. If you actually currently are trading, comment down below which stockbroker you currently use, or if you are micro investing, what have you actually seen in terms of your benefits and how has it helped you in the long term? If you have enjoyed this video, I really do appreciate if you can like and subscribe to the channel, especially as I'm planning to post weekly with this type of content and moving forward within this series of part 3 and part 4 within the next 2 weeks. I really appreciate your time into watching this video and checking out the channel. And for now, let's keep following the journey.